Holy crackers, Batman!
Just 1 second. There we go. Ladies and gentlemen, Johnny Bravo, ready to cue the fire. The United States is quite possibly ready to default on the debt limit yet again, in which Janet Yellen is ready to pull out all the stops and use the extraordinary measures to kick the can once more. They barely skirted by in 2021 as the debt limit was being reached by using those extraordinary measures, except this time there's not a unified House in Congress. Thanks for joining us, everybody. We're going to talk Janet Yellen, SBF, stock market crash, the bear case for the stock market, and why shorts are fucked. Plain and simple. This is an adult channel. This is probably not safe for kids to be watching. You have been warned. Yes, ladies and gentlemen, we are live. And at the end of this, we're going to take a look at Weeble's API, a video that I did in 2021 that proved that Weeble alone held 23% of all AMC shares in December of 2021. I can only imagine now, January 2023, how many shares are owned by retail in Weeble alone. That's insane. Insane. 23% of the entire float of AMC was being held in Weeble. And that's insane because when you add up all the other broker dealers, well, that exceeds the float by several 100% easily. So United States will hit its debt limit on Thursday, and they will start taking steps to avoid a default. Janet Yellen, old Yeller, has warned Congress. The Treasury Secretary Janet Yellen has notified Congress that the United States will reach its statutory debt limit next Thursday. And they have asked Kevin McCarthy, the new House Speaker, to either suspend or increase the debt limit. Does that sound familiar, ladies and gentlemen? It sounds familiar to me. Because it wasn't all that long ago that we saw this exact same problem. Things are on repeat. Yellen wrote that the Treasury Department will begin taking certain extraordinary measures to prevent the United States from defaulting on its obligations, and told McCarthy that it is unlikely that cash and extraordinary measures will be exhausted before early June. Again, Yellen warns that failure to meet the government's obligations would cause irreparable harm to the United States economy, the livelihoods of all Americans, and global financial stability. She's also warned several times in the past that the largest threats to financial stability in the United States are, one, stablecoins, such as those in FTX, FTT, and the other cryptocurrencies and exchanges that we've seen defaulting and going bankrupt already. And number two are over-leveraged hedge funds, such as those taking out heavy short positions on meme stocks. Ladies and gentlemen, we are in for quite the ride, without a doubt. Janet Yellen spoke during the Financial Stability Oversight Council at the Treasury Department in Washington, D.C. on Friday, December 16th. Refresh my Discord here so I can get the think tank on this. Great, thank you, everybody. They will continue to take extraordinary measures to prevent the United States from defaulting on its obligations. And that's why Joseph Biden, old Joe Biden, asked Janet Yellen to remain as the head of the Treasury. She's also the head of the plunge protection team, which continues to prop up markets by selling naked shorts on the VIX and using the SVIX in order to short the UVXY, the VIX, the VIXI and others. Someone's in the chat says Yellen is barcoding. Let me turn off all these notifications. Now, again, Janet Yellen is saying that failure to meet these obligations would cause irreparable harm to the U.S. economy, Americans, and global financial stability. She says, I respectfully urge Congress to act promptly to protect the full faith and credit of the United States. These are the same exact things she said back in end of 2021 when the United States was facing these same debt limit issues. The same thing. The difference now is we have a divided House. And it is going to be much more difficult, even though the majority of us understand that McCarthy is simply a Democrat dressed in a red suit. Of course, McCarthy's and they had absolutely no immediate comment. They say Congress is going to need to raise the debt limit without condition. Congress has to deal with this, and that would be done without condition, so there's going to be no negotiation over it. This is something that must get done. Yellen's letter effectively starts a clock counting down how long the federal government can continue to make interest payments on its debt. Congress, in December 2021, increased the federal debt limit to about $31.4 trillion. Absolute insanity. And of course, we've got those cryptocurrencies and stablecoins. Sam Bankman-Fried ordered a $65 billion secret backdoor line of credit, according to attorneys. Sam Bankman-Fried ordered the co-founder of his crypto exchange, FTX, to create a secret backdoor that allowed his hedge fund, Alameda Research, to borrow clients' money, up to $65 billion worth of your money, my money, FTX clients. I didn't have money in FTX, but you get my point. Without their permission, according to the testimony over the firm's implosion. Gary Wang was told to create a secret line of credit using customer funds from FTX to Alameda, said the attorney for FTX in Delaware Bankruptcy Court on Wednesday. Mr. Wang created this backdoor by inserting a single number into millions of lines of code for the exchange, creating a line of credit from FTX to Alameda, to which customers did not consent. Ladies and gentlemen, this is fraud at the highest level. Cryptocurrency exchanges are not safe. It says, and we know the size of that line of credit was $65 billion. That's Gary Wang. Dietrich said the backdoor was a secret way for Alameda to borrow from the customers on the exchange without permission, and Bankman-Fried moved $10 billion between the two companies, with a further $2 billion still unaccounted for, according to sources cited by Reuters in November. This is all according to the New York Post as well. The Post has sought comment from Sam Bankman-Fried, and the lawyer's testimony corroborates allegations made by the CFTC, the independent federal agency that regulates derivatives such as futures and swaps. Last month, the CFTC filed charges against Wang and Alameda Research CEO Caroline Ellison, who was Sam Bankman-Fried's girlfriend. They accused Wang of creating a virtually unlimited secret line of credit using customers' deposits. Dietrich's testimony is believed to be the first time an FTX official has given the line of credit a firm dollar value. For those of you that are unaware, Bankman-Fried was arrested and extradited to the United States from the Bahamas last month and is under house arrest at his parents'. And he had a $250 million bond release. This man.
Yeah, who paid for that?
Yeah, right. Which hedge fund paid this money, and where did this money come from for a $250 million bond? But of course, Bankman-Fried denies the claims, saying, I didn't steal funds, and I certainly didn't stash billions away. Unreal. Brad Milnes, thank you so much for your contribution, my friend. You are too kind. And of course, he's trying to blame Changpeng CZ Zhao, right, from Binance, for the destruction of FTX. But Binance didn't cause the issues. Binance didn't give themselves a secret line of credit. That was all SBF and Alameda. Unreal. The amount of criminal activity going on is astounding. Astounding, ladies and gentlemen. Crazy. What does this all have to do with the stock market? When you've got a ridiculous number of stable coins and exchanges going bankrupt like this, it is not good for the stock market, the prime brokers, and the other exchanges and stable coins that all trade on the NYSE and around the world. Let me scoot this over real quick. I think you guys could see that a little bit better. These are the valuation indicators for the average 60-40 balanced portfolio. And it's no wonder that it's gotten beaten down when this kind of level of criminality is involved in allowing your cryptocurrency and your money, 401ks and pensions, to be traded any which way in the market. Take a look at the S&P 500 value versus growth turning point. This is a multi-decade turning point for the value versus growth. The relative value backdrop makes the case that value stocks are still trading near 20-year lows compared to growth stocks. And these are corporate bonds. You hear my dog in the background? Usually when corporate bonds suffer these sorts of massive losses, it's due to credit stress, like it was in 2008, 2020, 1987, etc. But this time, it's about the shock that comes along with interest rate hikes. Check out commercial real estate. This is inflation-adjusted United States commercial property prices. And as you can see, they have moved well above the long-term average. Commercial property prices in the blue line compared to the loan average here are extremely, extremely overvalued even still. And they have a long way to fall. Adjust this a little bit. They got a long way to come down. Check out New Zealand. New Zealand. For those of you that are unaware, currently Germany is seeing the first drop in prices. Please mute your mic, brother. Seeing the first drop in prices since 2009. Germany's housing prices have been on a skyrocket upwards trajectory since 2009 up until this year. And the canary in the coal mine, as Zero Hedge has been calling this, well, they're saying that there's a big reset in inflation-adjusted house prices underway in developed markets. Check out New Zealand in black and America in blue. What lags? What moves first? Always. Look at this. In 08-09, New Zealand moved well before the United States. Same thing in 10. In 2020, they moved up before the United States moved up, moved down, right around the same time. What do you guys think in the chat? Are you bullish on the economy? Are you bullish in the stock market? Because it does not look good. Are you bearish? Take a look at global median inflation. This year, all measures of inflation globally were accelerating. Core CPI, CPI, and PPI. Producer price index is where the real problems happen. everything, in case you're unaware, follows the producer prices. Because if people that produce and manufacture your goods have increased pricing, well, then CPI will change as well. And it usually continues to go upwards until a recession. Look at 2008, 2009. We are here. You can see right now, looking at 08, 09. Make sure you guys can see that on my screen. Yeah, sure can. We're here now. That's right about here back in 2008, 2009. We've got a long way to fall as interest rate hikes do their damage. They have yet to properly damage the stock market in a way that it will be reflected. It will be reflected in Americans' bank accounts even more so than it already is. There has been more rolling of short positions in the last 5 days alone on heavily shorted stocks than there has in several months, nearly a year. It's been up 18% gains on the Goldman Sachs index for the most short rolling from January 6th through today, January 13th, 2023. Roadrunner brings up a great point. Remember Warren Buffett's quote, "The stock market is a money-making tool from the impatient to the patient." Do not forget that. Thanks, Roadrunner. Always coming out with great points. Check out payrolls and CPI. Look at the way that CPI has been moving for us. Payrolls January 6th in 2023 on the Bloomberg Dollar Spot Index have plummeted, and CPI has gone right along with it. Why? Because people are getting paid less. They're not getting paid more. It is not keeping up with inflation. And in order to bring CPI down, payrolls need to go down. That means Americans are losing their jobs. All U.S. majors were higher this week, extending the gains from Friday's payrolls prints, with small caps and the NASDAQ leading the charge 8%, while the Dow was up 4% and the S&P was up 5%. This is majorly due to short covering. That is why the Goldman Sachs short rolling index is up almost over 18% in the last 5 days. It is not a bull market, it is short covering. In the meantime, the volatility index continues to get pummeled. It is being massively manipulated. It is at its lowest level since January of 2022. In over a year, we have not seen the volatility index at $18. I picked up a lot of volatility index calls over the last couple days as the market is seeing a little pump from the short covering rally. Yeah, Cody Buchko says CP lie. There's a reason they call it CP lie. Point Break Thor says I bought some NWO today, fighting hedgies and brokers any way I can. My man, I didn't buy that, but I did buy more AMC1 and AMC contracts. I was really pumped about that. I got a great fucking price on leaps for AMC, and I remain extremely bullish on those heavily shorted meme stocks for the same reasons that we're seeing now. And when market crashes occur, which are usually after the Fed pivot, not long after, usually about a month or so, heavily shorted stocks like Volkswagen in 2008 tend to reach new all-time highs. Let me go back to my chart here. These are bonds Bonds were at bid this week. They extended their gains from payroll print last Friday, outperforming the 5-year since before the jobs data. The long end lagged the rest of the curve, but yields were still down 18 basis points since payrolls and CPI. And the yield curve, as a matter of fact, do I not have that up right now? Well, either way, the yield curve, the 3-month over the 10-year, has flattened massively. Oh yeah, take it out. You can check it out right here. It's on my screen now. And is inverted even more since the beginning of this year, 2023, as the recession fears grow. The deepest inversion ever right now, by far. And this is a #1 recession indicator. This is absolute insanity, ladies and gentlemen. Absolute insanity what we're seeing right now on these markets. And the fact that people are still bullish on the stock market, well, that just goes to show that the Fed, they're calling the Fed's bluff. And it's only a matter of time before capitulation takes place as blue chip stocks get pummeled into the ground, as 401ks take another beating. IRAs and thrift savings plans and pensions, unfortunately. Even still, the Fed rate trajectory expectations are surprisingly dovish. And the payroll prints that we looked at just a minute ago sent them down, you know. But we need to see a hawkish shift here, truly. Truly we do. These are gold contracts that we're seeing right now. Gold surged over $1,900. $1,900 per ounce. That's 6 straight days of increases in gold prices as central banks all around the world buy up and stack up gold at record levels that we've never seen before. This is evidenced by the Bureau of Economic Analysis statistics and the Federal Reserve bank analysis as well. Now, from the Board of the Governors of the Federal Reserve System, they say that the Federal Reserve Act requires the reserve banks to remit excess earnings to the United States Treasury after providing for operating costs, dividends, and any amounts necessary to maintain a surplus. During a period when earnings are not sufficient to provide for those costs, a deferred asset is recorded. For those of you that are unaware, a deferred asset is a liability. The deferred asset, aka the liability, is the amount of net earnings the reserve banks will need to realize before their remittances to the United States Treasury resume. During 2022, reserve banks transferred $76 billion from weekly earnings to the United States Treasury, and in September, most reserve banks suspended weekly remittances payments to the Treasury and started accumulating a deferred asset, which is a liability, which totaled $18.8 billion by the end of the year. Usually with these deferred assets, aka liabilities, they expect to pay them later in the near future. But of course, the Federal Reserve continues to lie to people and say that a deferred asset has no implications for the Reserve's conduct of monetary policy or its ability to meet its financial obligations. Is that so? Is that so? We have no problem meeting our financial obligations, huh? Check out this chart from Zero Hedge. Daily options hit an all-time high this week. Pull up the stock chart of BBBY or CBNA or Bitcoin or XCT. Same story. 1.1 million one-day SPX options were traded today. This was a new record, and around 50% of options traded expire within 6.5 hours or less. This is what happens, according to Goldman Sachs. According to me, this is what happens when 0 days to expiry options are released on the market. This short-dated SPX volume as a percentage of total volume exceeding nearly 50% is not a bullish indicator. It is extremely fucking bearish. As a matter of fact, I better share that right now because people need to see this shit. I hope they understand what it means. Mac10 says, quote, good news, consumer sentiment bounced back. And I can detect quite a bit of sarcasm in this. Look at consumer sentiment bouncing back here. Yeah, not likely. Check out this line that he pulled here in 2008, 2009, well before we saw the bottom here. Consumer sentiment bounced back in 2008, 2009. But what happened when that consumer sentiment bounced back? The stock market went up a tiny little itty bit and then absolutely crashed. Absolutely crashed, bringing the Dow Jones there from around 660 to 370. Another 50% drop. Ladies and gentlemen, I'll be shocked if we don't have at least another 50% drop on the Dow Jones and the S&P 500. I'll be absolutely fucking shocked. I wouldn't be surprised to see a greater than 50% drop in the stock market in the coming weeks. What do you see here? Lower highs and lower lows on the S&P 500 from January 2022 through January 2023, with many little bull traps. Bull traps. You can call a lot of people, every time there's a bull trap, people start to say, the bear market's over. Not even fucking close. Not even close. Yeah, YB Normal says it's manic rug pull time. I think you're right, man. It's time for a rug pull. And what do you notice about these two charts? This right here is January of 2022, right in the center, to today, January 2023. These are the Federal Reserve balances of United States banks as of January 11th, 2023, and the United States equity market cap. Right here in the middle is exactly the same as the middle of this chart. What's happening? Lower lows, lower highs, with bull traps every few weeks in order to keep retail invested, for them to pull the rug over and over again, to get people to lose money on options, on stocks, on their 401ks, their pensions, and their IRAs without actually pulling them out of the market in order to let them be the bag holders. Meanwhile, every time it happens, banks take money for themselves, and institutions and market makers profit off of your loss and leave retail holding the bag. Take a look at BlackRock's assets under management. This is huge. You know what? Larry Fink said that this is unlike anything they've seen in decades in an internal memo describing the volatility of markets right now. They reported an 18% decline in the fourth quarter. Today, as a matter of fact, they reported that. And they say that it's a contagion amongst stocks, cryptocurrencies, bonds, and fiat. But recorded positive stock and bond inflows via institutional clients in the quarter. I wonder where that money's flowing to, because I don't think it's moving into bullish positions. BlackRock's earnings are derived from fees that they make from their investment and administration services. When stocks and bonds around the world tumble 20%, 15% last year, the result was that BlackRock's assets under management also plunged. And their assets under management went from 10 trillion a year ago to 8.6 trillion this year. That may seem like it's not a lot, but ladies and gentlemen, that's $1.4 trillion. Not million, not billions, but 1.4 trillions with an S. And the revenue slid by 15% to 4.3 billion. So they lost 15% of revenue, almost 20% decline in profits as well. And their entire revenue for last year fell by 8% as well, primarily driven by the impact of significantly lower markets and dollar appreciation that we've seen here with the lower lows and the lower highs, the average assets under management, and the lower performance fees seen by BlackRock are seen by some people as good news. They said that there was $146 billion in long-term inflows recorded in the fourth quarter of 2022, up from $65 billion in the previous quarter. And total outflows, well, they were $114 billion. I bet most of those are moving money from bullish positions to bearish positions under the threats of what's obvious to many, a recession. BlackRock also laid off around 500 employees. Goldman Sachs is laying off 3,000 employees. Amazon is laying off over 17,000 employees, and so on. Yeah, the Financial Times received a memo from Larry Fink and said that this is literally, quote, unlike anything we've seen in decades. And the reserve balances at United States banks shows a lack of liquidity. Also seeing those same lower highs. I give big props to Fortune for coming out with this article. They said a decades-long broken economy screwed over millennials, and their decision to delay having kids is fueling America's historically low birth rate. This is exactly what the World Economic Forum wants. They said our analysis found that most young people still plan to become parents, but are delaying childbearing because they're fucking broke, sadly. But I give huge shout out, huge props to Fortune for coming out with this. Zembach, do me a favor, mute yourself when you're not talking. Again, Mac 10 puts out another awesome bear versus bull. Got Jeremy Grantham, a legend in the bearish category, versus Tom Lee in the bull category. Michael Burry in the bearish category, who correctly indicated the 2008 financial collapse before it happened, versus Jim Cramer. What happens when Jim Cramer is bullish on a stock, ladies and gentlemen? Tell me. John Huesman is a bear versus Cathie Wood is a bull right now. Well, how's ARK doing? How's Cathie Wood's investments doing? Mohamed El-Arian, a world-renowned economist, is bearish, as is Dr. Marco Metzler, a world-renowned PhD economist, former Fitch Ratings agency director. Compared to the bulls, Joe Kernan, Michael Wilson in the bears, and of course, on the bull territory, the National Association of Realtors, who has a vested interest in making people believe that we're still in a bull market, or that a bull market is finally beginning. But that's not the case. Look at Michael Lynch posted on Twitter, JP Morgan's gold vault drops $161,000 or 3%, and Brinks dropped 51,000 ounces on 1%. The year-over-year decline for all the COMEX vaulted gold is 10.6 million ounces, far greater than any prior period. Jesus Christ. This is also happening because of the central banks that are buying up all this stuff. Central banks buying up all of the gold and silver and precious metals is extremely bearish for the global economy, because they always do that when the fiats are tanking. We might be near the top of the DXY and the fiats right now. And this is all good news for heavily shorted stocks and meme stocks. Take a look at Samuel Clemens. This guy is an absolute fucking genius here. And he shows an interesting story in the borrow fees. Right, what do we see here? The borrow fees, as you may know, have been climbing higher from the moment that FTX collapsed on AMC. The AMC December 30th, 2022 futures are also climbing higher as the borrow fee went from 16.47 November 8th, 2022 to 55.67 November 11th. This is the time that cryptocurrency giant FTX was found to be abusing your funds via a $65 billion backdoor line of credit from FTX to Alameda in order to illegally use your funds. Big shout out to Darren Harper here on Twitter. The illegal spoofing for options, control number 3. Watch as illegal spoofs changed from 13,000 to 10,000, which with 3,000 canceled on each side. Spoofing is the placement of orders which are never intended to be processed. So my volume went down. Let me adjust that a little bit. And I'll close this chat box for a second so you guys can see this occur. He doesn't have sound on this video. It's just the pointing it out. But here you go. You see it's at 10,000 right now. You can see it at this moment, 13,400 down to 12,800. And then the order is changed once again. It does not execute because the price is at $4.98. You can see the spoofing right here on the screen. And bam, now it's at 10,000. Let me go back to it one more time and you can see it happen. 12.8 right here. Oh, you can't see that on your screen. Let me scoot this over for you. I'm pulling this over to the left now so you guys can see exactly what's going on here. But you can see this order change. It's at 12.8 thousand right now. Starts at 13,500. The order is manipulated and changed over and over again. 12.8 thousand. Watch, keep going. Again, we're at $4.98. The order's at 12.8 thousand now. 10,100. As the order is being manipulated in real time on the stock market. That was today, January 13th, 2023, on AMC stock. As you can watch on the level 2 data as the spoofing occurs. Ladies and gentlemen, this is why the stock prices are going down. Not because retail is selling it off, but because it's being greatly manipulated. And this will not be stopped until after a financial collapse and a massive meme stock run causes the Securities Exchange Commission to make changes like they did after the global financial collapse of 2008. Hopefully this time they try a lot harder because it didn't go very well. It did not go very well at all. After 2008, Dodd-Frank and Reg Show did absolutely nothing. And people that have been shining the light on this, such as Christina Lee Copeland and Darren Saunders, Mark Falk, Wes Christian, and other peoples that are championing for change in the stock market, have been consistently telling us.
Investigative shows on TV began piecing together a major expose that promised to blow the roof off the naked short selling scandal.
NBC Dateline interviewed 25 people. They had 75 hours of film. It was scheduled to air. It was confirmed by the producer that it was to air.
The Crusaders hoped that after years of being ignored, the burning issue of naked short selling and massive fraud on Wall Street would finally be addressed before a national audience. But instead, Dateline aired a special about American Idol singing star Ruben Studdard.
What a joke.
When the story, which was scheduled for broadcast, suddenly got yanked in favor of Ruben Studdard, it was apparent that something was going on.
From our studio
On July 31st, 2005, after several other postponements, the Dateline expose finally aired.
Was a 9.5-minute story about Rod Young and Eagle Tech, and it was so watered down. The most scathing comment in the whole piece was that naked short selling may be illegal, and it's a very complicated story. In fact, too complicated to tell here, and it was a joke.
I didn't even know he was going to say
But naked
that.
short selling wasn't totally ignored by the media. In 2007, Bloomberg Television featured John O'Quinn's and Wes Christian's crusade against phantom shares and Wall Street fraud. But it still wasn't enough.
This is from the Wall
With
Street
no one to stop
Conspiracy
them, the
movie,
crooks began to attack larger companies.
which was released in
Companies like
2012.
Overstock.com, an upstart online retail company run by Patrick Byrne. Overstock offered brand name merchandise at discount prices.
There's this fringe of retail that most people don't ever know about.
That's
We
us.
realized we could bring all this stuff into Salt Lake City and blow it out on the internet.
In 2002, Overstock went public, growing its revenue to over $500 million by 2004. Around that time, Patrick started to receive some unusual phone calls.
People started contacting me, sending me emails, sometimes leaving me long voice messages, talking about this strange phenomenon going on Wall Street. And I just delete. I didn't pay much attention. Sometimes I'd send a little email in response. Finally, this fellow got through to me and he talked to me for about an hour. I thought he was nuts. It all just sounded crazy and wacky, and at the end of the hour, I said, okay, well, thank you very much. And I basically gave him the brush off. And he said, I can tell, Patrick, that you don't believe me, so I'm just gonna make a few predictions, and when these predictions all come true, you call me.
The predictions were that a handful of journalists would attack his company through the media, that Overstock would become the object of a federal investigation, that the company's stock would begin to trade on foreign exchanges, and that Overstock would appear on the then upcoming Reg Show list.
Sound familiar?
Within about 2 weeks, all 5 of these journalists who he had predicted would called me. I became the object of a very strange federal investigation that went nowhere and was dropped.
How many mainstream media
We did
attacks
start
have you seen
showing up
against
on,
your favorite meme stocks?
Bahamas and Bavaria and Australia and Stuttgart. And oddly enough, when the Reg Show list came out, which was January 3rd, I think, of 2005, we were not on it. And but we went on it about January 20th or 25th or so. So if somebody can make predictions like that that are so far out and they all come true, you have to go back and try to figure out what is it about the theory.
Overstock wasn't the only larger company on the Reg Show list. The list also included hundreds of companies from the New York Stock Exchange, the NASDAQ, and the American Stock Exchange.
Maybe it started with small firms, but it was...
These are the dominoes that we're currently seeing in the greater financial system. Naked shorts, spoofing is nothing new. We need to stand up against this stuff, and the best way to do that is to buy and hold and buy some more. Apes are the cure.
certainly going to move on to larger firms. And unless this was tackled, the implications for larger firms were going to be enormous.
The Eagle Tech became the overstocks, where everybody isolated it to small micro-cap penny stocks. We found that it went far beyond that.
Yes, it does.
These thieves, in my opinion, saw that they could steal money by counterfeiting shares of the small companies. They simply just went up the food chain into bigger companies.
Sound familiar?
I dug into it.
GameStop,
I dug
AMC.
into it for about 3 or 4 months. I read, economist papers, and I got textbooks, and I learned about the stock settlement system, and I talked to brokers. I kept on digging, expecting to find something that disconfirmed this theory, and the more I dug, the more everything confirmed it.
Patrick realized that Overstock.com was now a target and had come under attack by unscrupulous Wall Street traders.
I remember the precise moment when the light bulb went off. It clicked. I just felt sick to my stomach.
It's sickening, isn't it? It is sickening.
I actually thought I may have lost my mind.
A lot of people sometimes think they've lost their mind, but we haven't. We haven't lost our mind. And I'm happy to see that the Wall Street Conspiracy Down the Rabbit Hole 2023 sequel to the movie that we were just looking at, the Wall Street Conspiracy movie, which came out in 2012, my apologies, is going to be released later this year. We are going to be interviewing Christina Lee Copeland, as well as Wes Christian and Mark Falk, who were in the 2012 movie, next week on this channel. And thankfully, it made the front page of the Westview News. We will also be interviewing along with George, one of the owners or CEO here of Westview News. He will be joining us on the channel as well this coming week. Here's the
2 decades
trailer.
ago, a group of unlikely crusaders exposed massive corruption on Wall Street.
Naked short selling? Naked short selling is
In 2012, my film, The Wall Street Conspiracy, told their incredible stories.
You could actually just make money by selling shares that didn't exist.
And when you counted out all the shares being sold, there was something wrong. There were too many shares being sold each day. There was too much action in the markets.
Just in 2 weeks in July, the fails to deliver were $17 billion.
Everyone knows the problem. We know it's all about money. It's all about Wall Street making money at the expense of an honest stock market.
In Texas, simple version, we call that stealing.
I never thought 20 years later the entire world would still be crying out for justice.
Will someone take action on behalf of individual investors?
20 years later, in the year 2023, the fight for a fair and honest Wall Street continues.
Fight continues. It's not over.
Get bashed by these people.
We can, because that protects them against anybody looking into what they're really doing.
They wouldn't do anything about it because you can't balance the world.
On hundreds and hundreds of small young heroes.
And the more I dug, the more everything confirmed it.
It's just two sides, the upper world and the underworld.
So I would say to myself, I'm one of the dirty dozen.
Maybe
That's
not
exciting.
tomorrow, maybe not the next day, but someday and soon, we're going to see a revolution.
The ruin and the harm of this is not over. And as God is my witness, I'm more resentful about something that hurts my children and my grandchildren than I am about something that happens to me. And our responsibility is to make sure that the world is safe for them.
I'm incredibly excited to be interviewing with Christina Lee Copeland, Mark Falk, Joni Klar, Wes Christian, a lot of people here. You know, Federico, which we interviewed last week as well, are all going to be joining us again. Wolfie AMC and friends for interview in depth into the new film, The Wall Street Conspiracy: Down the Rabbit Hole, which is being released later this year. We're going to talk market manipulation, stocks, phantom shares, the whole 9 yards.
Yes, we are.
Yes, we are. Wolfie, thank you for joining us, my friend. But yeah,
I can't believe I nearly missed it.
I'm glad you made it, man. Yeah, George, the owner of Westview News, I believe, is also going to be joining us, and they happen to make the front page. This was just moments ago. It was just posted and sent to me by Christina Lee Copeland.
That's so cool.
So definitely looking forward to that. Things haven't changed, ladies and gentlemen. And here's a video that we did December 2021 proving that 23% of the entire float of AMC was held in Webull alone. 23% of the entire float. That doesn't mean that they actually hold 23% and the other brokers don't exceed 100%. What it means is if one broker, Webull, can hold 23% of the entire float, then I can only imagine how many hundreds of percentages of the float has been sold via other broker dealers when you combine them, because there are hundreds of broker dealers. Marcel, Kalinovic, 12:23:21, 12:16 a.m. All right, just wanted to Get a timestamp on that shit. We found the API data for Webull. And I pulled them one by one in order to prove to people that we did not manipulate these figures whatsoever. You know, I swear that I did not change a single number on the API data. We happened to find a link to it because it was open, and Webull's security is absolute trash. And via that data, I was able to add up one at a time instead of putting it into an Excel spreadsheet, which people could possibly think that it was being manipulated. And we just added it up here, including fractional
It's adding up
shares.
real fast, guys.
This was December of 2021, so this was quite a while ago. I don't remember.
6.
I don't really remember.
These all could be institutionals too,
It's
or at least a
Weebles.
mix thereof.
It's
Weebles.
I'll remember
Weebles. Why would it be institutional? You know, institutions aren't, well, never mind. Most institutions and most companies, but that's not true. A lot of companies could be trading on Webull, I guess.
So I spent 22 minutes adding up every single number. These 3 lines are 3 different data sets. And the middle number is the number of shares.
Could this be the trades for the day?
At the time, I wasn't so sure. I was still figuring it out, but we figured it out since
So
then.
it sure looks like
this is
this
the
is gonna
stock
add up.
price. The stock price at which they were purchased. This is how many shares
Still
were
got quite a
purchased.
bit to go.
Right here in the
15
second
million
line.
right there.
So we'll just fast forward through this so you don't have to sit through
Profit
22
ratio,
minutes of
0.168.
myself adding things up.
I don't know what that means, but
yeah, we figured it out. This was the stock price, this was the shares, and the distributions here, the profit ratios. As you can see, I went through and added them up one by one line at a time. I had all the various stock prices.
That'll do it.
And Webull.
And what did we come up with?
Wait a minute, wasn't there heck?
There you have it.
Canada.
Fuck.
So I know that I'm pretty sure it's just the U.S. and then a couple countries in Asia, but I know like China and Japan, they have Webull.
That makes sense.
Wait a minute, wasn't there headquarters out in China or Japan
Hong
or
Kong.
something like that? There we go. I knew it was something that I thought about it. Yeah, you're right.
Yeah, people, they can also trade on the exchanges over here via depository receipts, I believe. They've got
So
different
here's another
regulations in
calculator
Europe
here on
and
my side here.
Canada.
But basically, we added all this up, all the data from the Webull API on December 21st of 2021. And we found out that back then, even the retail already owned 121,423,844.7 approximately shares of AMC stock just in one broker dealer out of hundreds. There are 500, at the time, there was only 516 million shares of AMC total. 516 million shares. And on one broker dealer, I cannot stress this enough, that was 23% of the entire AMC float. What do you think happens when you add up Robinhood and Fidelity and Schwab and Public and Moomoo and all these other brokers out there, E-Trade and so on? We can just list them for an hour, but what's the point? Out of the 121 million, if you subtract it from the 516 million float, that's only 394 million more to go. 2 more brokers and the float's exceeded. You know, if you add Fidelity and Schwab, which are even bigger than Webull, they've already exceeded the 516 million share float. And this is why options contracts are so dangerous to broker dealers, because there are not enough shares to go around, especially if the broker dealers have to go out and fetch those shares at whatever price when those options are exercised. Options are the way to buy shares when there's no buy button. If you hold options and they go in the money, you can sell some at a premium, a very, very huge premium while the price is moving up, to market makers and short hedge funds, because they will buy them. Because if it saves them $10 to buy your options at $6,000 a contract, opposed to going out and paying $6,100 per contract, $6,100 for 100 shares. If they can buy your contract for $6,000, they're going to buy your fucking contract, because it's all algorithmic. They don't go out and calculate it by hand and figure it out. The computers, the algorithms, automatically dictate, okay, I need to buy 100 shares. How am I going to get those? Well, instead of going over and getting them from somewhere else, I'm going to pick up an options contract to give us the right to get those 100 shares. That will save us $100. It is as simple as that. I don't expect any retailers to be able to spend $6, $10, $20, $30,000 on a single options contract. But market makers and short hedge funds, they've got that money. And when they don't, they'll default and become insolvent. And when that happens, then the prime brokers will be due for that money. And the broker-dealers will have to pay that money. And when that happens, the broker-dealers have to go out and fetch those shares in order to give you the exercised calls. And they will also go insolvent. And then the clearinghouses and the DTC will have to pay for that. And that money will come from the other members of the DTC. Then you'll have other institutions and other prime brokers defaulting and going insolvent because of these contracts. Therefore, the number one way to buy shares when the buy button is pulled is by selling some contracts for a profit and then exercising shares. I'm not saying that this is what you should or shouldn't do. I'm saying that that's what I plan to do. You should do whatever makes you comfortable with your money and do not do anything just because I suggest it. I cannot stress that enough. Do not do anything simply because it's what other people are doing. But the number one way, in my opinion, in order to buy shares when the buy button is pulled is to sell some contracts for a profit, because the market makers and short hedge funds and the broker dealers will want to buy them from you to save $5, $10, $100, or $1,000 compared to going out and fetching those on the open market as the share price is running up. That causes delta hedging by the broker dealers, and that causes gamma ramps, and those gamma squeezes cause FOMO buying, fear of missing out, more retail buying, and it's a vicious cycle because it's repeat over and over and over again. And that's why on January 28th, 2021, the buy button had to be pulled. And if retail had exercised their call contracts, then all of those broker dealers and prime brokers and short hedge funds would have been smashed into the fucking ground, and we would have seen the mother of all short squeezes already.
Federal Records
How do I
Act,
know?
but the regional
Janet Yellen
banks
fucking
currently
told me
are
so.
not.
Thomas
Would
Peterfee
you
fucking told me.
support making Fed regional banks subject to FOIA and the Federal Records Act to ensure greater public transparency and trust in the Fed?
This was September 28th of 2021. Janet Yellen and Jerome Powell testifying in front of Congress during the CARES Act.
Senator, that's a good question. I'd like the chance to think about it and come back to you. I would want to reflect on that and on the reasons why they're not subject to it, and I will do that.
Jerome Powell could not
Chairman
answer.
Powell, if there's something, and Mr. Chairman, I'll wrap up here the statement. If there's something that concerns, I think, many of us, is the loss of trust of the American people in their government. And here you have one more example. I appreciate your leadership, and thanks for consideration of that request.
Sure.
Thank you.
Senator from Georgia, Senator Ossoff is recognized.
Thank you, Mr. Chairman, and thank you to
Listen
our
up.
guests.
This is huge.
Mr. Chairman, a question I've asked you in several consecutive hearings. The COVID-19 pandemic, of course, the most significant shock to the U.S. and global economy in the last 2 years. Beyond COVID, what do you assess are the most significant systemic risks or threats to financial stability in the U.S. and globally?
When I think about systemic risks to the financial system, I always think about cyber risks, really more than anything else. We have a very highly capitalized banking system, one that is much better at measuring its risks. So the more traditional making bad loans, losing money, and things like that, that'll happen, but the banks are really well fortified against that. The risk that we haven't really faced the full brunt of yet is a successful cyber attack on a financial institution of some kind, be it a financial market utility or a bank or another financial institution. And we work closely with Treasury and other agencies all around the country on that. You never have the feeling you're doing enough, but it's a very high priority to be ready for it. But that would be the number one thing.
Madam Secretary, the same question for you, please. Other than the ongoing COVID-19 pandemic and the terrible economic toll that it's taking and the terrible health toll that it's taking, looking more broadly, what do you assess to be the most significant systemic risks or threats to financial stability?
I think there are threats to financial stability that have come from the growth of activity in the shadow banking sector. We saw some of those threats emerge during the onset of the pandemic. We have, for example, open-end bond funds that guarantee daily redemption, saw massive withdrawals by individuals who wanted to flee to cash, and that can trigger fire sales of assets with systemic consequences. The Financial Stability Oversight Council that I head has taken that up as a topic that we're looking at and examining. There are issues relating to hedge funds and the possibility of leverage there that can trigger financial runs. That's another topic.
Ladies and gentlemen, you heard it right there. Janet Yellen testifying in front of Congress that stablecoins and over-leveraged hedge funds are the largest risk to financial stability. We've known this for a long time, but to hear this coming out of the head of the United States Treasury is absolute chef's kiss, without a doubt. Darktown says, straight from the horse's mouth, straight from old Yeller's dirty, stinking mouth. That's why I still firmly believe and continue to buy AMC, GameStop, Ape, MMAT, BBIG, and many, many other heavily shorted meme stocks. But again, as you guys all know, AMC and Ape is my baby. Plain and simple, the whole point of this video is to underline the fact that the United States stock market is not in good shape. Neither is the global economy. And when margin calls go out from many institutions around the world, not just from the DTC, but from all institutions that are margin calling each other, well, that leads to the fire sale of assets and the closing of short positions. Ladies and gentlemen, we're going to be so motherfucking rich! I have no fucking doubts about it. I cannot fucking wait, but I will wait as long as necessary. Sorry, that was loud. Holy shit!
Goddamn rich. I think it's time to blow this thing. Get everybody in the stuff together. Okay, 3, 2.
I wish you peace and wealth. Have a great fucking weekend, everybody.
Fucking rich.
Bought a bunch more AMC contracts today, and I think I bought some AMC contracts as well. I can't even remember. I bought so fucking money.
Griffin, I want my fucking money.
Hey, Griffin, pay me my fucking money. Jerome Powell, Janet Yellen, get the fucking money printer out. I'm not fucking leaving. What do you think, Kate? You fucking leaving?
Holy shit, we're gonna be so fucking rich. Damn it, we're gonna be so fucking rich.
What the fuck's going on over there?
Get rich and die lying. Griffin, I want my fucking money. You're an original, aren't you? Hey, Yellen, cowboy, give me the fucking money.
Cheers, my friends.
Get the goddamn money printer out.
What's up, that money printer, mate?
Let's go. Great.
Get the goddamn money printer out.
And we are the whale, guys. I mean, we own it 5 times over.
We're the fucking whale. Plain and simple.
Well, that's the thing that people talk about VW. They keep saying, oh, it's different, it's different. It is. Of course it is. But in some ways, I think it's stronger because you're dealing with people, say the majority, haven't had it. But I don't know any billionaires that have been buying shares.
Well, you know what's wild? Wolfie, the Porsche settled with the government in 2008 and said, all right, that's enough. That was one whale. We are the mother of all whales.
Yeah, there's no settling with us. There's no settling with us.
We're the board, man. You cannot reason with us. You know what I'm saying?
Exactly.
We're going to assimilate you.
No matter how much they offer, there's going to be people saying, fuck that, I want double, triple, 5 times that amount. No matter what they offer.
100.
They could offer $100,000 a share, and I guarantee you 40% of the people would be like, fuck you, I want $500,000 a share, you know? That's what they'll be like, it's GameStop. I want $2 million a share.
I want Wall Street to get turned upside down, and I want to see a bunch of motherfuckers who are literally evil end up on the fucking street. You know.
Same. I can't wait for fucking Biden to get on TV and stutter away and say, all right, there's enough of this. Gary Gensler and then the Fed. It's gonna be phenomenal. This is great. I love it.
They might try to sweep it under the rug. They might just try to sweep it under the rug and be like, oh, all these hedge funds fucked us. Let's never talk about this again. You know, and that's it. So.
But that's why I love the fact that it's between 5 and 10 million people, because the eyes are on this. You know, the noise has been made, and when it comes out, you're going to have 5-10 million burries that have all got a tale to tell, and you know, there's going to be serious questions asked to the regulatory bodies. What the hell happened after 2008, and why didn't you put the rule changes in 2012? And what do you mean the only thing you did of any essence was an SSR rule and then made market makers exempt? You know, they're going to be serious questions. But then they got on the other side, they got a massive transfer of wealth to people that are going to have the time and be open to be able to say what they did, what their role was, what their part was. And then I'm hoping that's the big thing for me is change. 5-10 million people suddenly come into a serious amount of money, if that's how it ends up, because no financial advice. But if it works the way, you know, those who have, for the reasons they have, expect, you know, I'm hoping that's going to really change. And when I look at the SEC rule changes, etc., that's what actually gives me even more. I know, you know, a lot of people are down because it took so long and this, that and the other. Not really seen it, but that's background. That DOJ announcement to me was massive. I think that's why people get nervous when people start saying, oh, it's going to. And we've had, you know, I flagged it up, not that it got picked up on, but, you know, we've got real smart people that have been looking at this, real smart apes and DD done, etc. What if they was all meant to be correct? What if they were all correct, but because of everything going on in the background with the manipulation and the tricks and the market exempts and with all that going on, which is now known, I never knew none of this a year ago, 18 months ago. I never knew about market exempt. I didn't know they could do a naked share without a locate. And all this is coming out, and there are going to be serious questions saying, that's not liquidity. You know, there's court cases, there's a paper trail going back 20 years on this stuff. None of this is new. And when it comes out, it's blown wide open. It's not, you know, UK was told
$30 has arrived.
I ain't missed.
Go ahead, brother. You were making a great point. Keep going, brother.
Go ahead.
Yeah, sorry, I just got cut off and then everyone pulled in, so I sort of lost trail. But it's that paper trail, which it's the aftermath of us hitting a home run, where we would have done money, and yet we've been here. You know, 2008 woke a lot of people up, but a lot of people still don't know the truth behind that. They've all watched The Big Short, etc., but they still don't know the truth. They just see it as it's what happens in the market. This time round, and we've been told by all MSMs, you know, the Gasparinos and the, you know, I don't even like mentioning their names and give them airtime, but hold them responsible afterwards, because you're going to have all these experts that are on the telly getting paid hundreds of thousands of nice suits, talking down to us like we're all idiots, and insinuating everyone's like 16, 18, living at home with their mum, you know, never had to live in the real world. Come on now. This is people. These are the same people that the rules and the 1%ers and the stock market has ripped from your 401ks and lied to us. You know, this is blatant lies. This is theft. This isn't just the market and how it works. You know, dumb money loses money. Well, if you listen to the experts, everyone who bought AMC and only AMC has made a shit ton more than any of them experts have. And yet we're still held out as the ones that are the idiots. And when they want to talk and they want to go on and do their interviews, start talking about the real stuff. Because if you don't, afterwards you're going to have no credibility, because everyone's going to say, we told you, we told you, we told you. And you kept telling everyone not to put us off, because we was already in it, proved we weren't leaving, proved we weren't going nowhere. You came on MSN to tell everybody else whose money you had, every other investor, everybody who had a 401 and never invested in the market or a share or Apple, who lost their pension now, not because of us, we're the cure, not the cause. You told them that we were wrong and you were right. You told them we were dumb money, and you told them to go and buy Apple because it's going to hit a $3 trillion market, and it tanked. And they're the same people you did it to in 2008. My mum and dad, working 18 hours a day to pay a 17% mortgage because of some greedy bank that we had to bail out afterwards, that we had to have austerity afterwards, we had to suffer afterwards, so that they carried on getting richer and nothing changed. Damn! You answer that. You tell the people that. You come back and you explain that.
Fuck yeah, that's exactly right.
Goddamn right, brother. Nothing fucking changed. We lost our fucking pensions, 401ks, life savings, our homes, our cars, everything, our jobs. And then we had to give them billions of dollars in fucking bailouts. Fuck these banks. It's our fucking time. $30 fucking. Let's keep it fucking going.
That's right.
Wolfie,
that's
people
right.
are loving it, dude. Everyone feels that shit, dude. 100%, brother. Everyone is giving you so much props, man. You are fucking on point, and everybody knows it, man. No matter what the mainstream media wants to tell others, what they want to preach, I don't give a fuck if CNBC is owned by Citadel. I don't give a fuck that Pfizer owns CNN. We know what's really going on here. So thank you very much for that, brother. By all means.
Appreciate you, brother.
No worries, man. We've got to speak up for the millions that ain't here now. Don't forget, there's people gone from that. That 2008 hurt a lot of innocent people. And you'll be walking around. I do it every day. I've done it every day since January when I bought in. This was my chance to pay them back. But I walk around and it's like you see the scenes in some of the films when they're driving around in a car. I can't think what the margin called, the film. When he's driving around in that car and he's got the young lad next to him and the young lad's attitude is, I don't give a shit, you know, until he realises he's even going to be paid. But they're looking out the window and they're looking at all the people that just do not know. So if you're going to do things in your community, A1, top of my list, family, A2, top of my list, make sure you get that word out amongst the people you've got, because they call you stupid at day. Look at Burry, he's been wrong more times than he's right, but everyone holds him up as an expert. He sees something that we all see. You know, DFE started this ball rolling in GME. That's going to do its thing as well. You know, all this infighting and stuff, that has to stop, because it's me, you against them. It's not me against you. I mean, how does that work? They want it. We got all the bots arguing with bots and we all jump in on it. No. Start talking about the people that were hurt, the people that have been forgotten. Go and have a look at the Wall Street Conspiracy, the film that they pulled 5 minutes before it's due to air in America. Go and have a look at Darren Saunders walking around with the placards on. That man died fighting what we're fighting today. You know, there's good people that ain't here today. We need to remember them and we need to be loud after this. It's not because we're rich, not because we're arrogant bastards that turned into the people that we're fighting against, but because we care and we want change. We want these fuckers held accountable. Running around in their planes when we can't even go out, can't even visit our mums. Come on now. Change. We need change.
Fuck, man, I will vote for you. Just fucking run.
Wolfie for president.
Bro, for real.
Prime Minister, everything.
Now I'm going to $1 million.